Alrighty. All right, good morning, everybody, and welcome to OptionPit.com, your home for options, education, and trading. Here's Mark's blog from Friday, the UVXY vol coming down. And, you know, I think after whatever that small rally, and it was, it's probably on its way down. Just not getting a lot of action in that. Before we get that, so we had our Saturday course on short calendars. It will be in, it should be here in my courses, but, or our store. We'll get that up. So basically, you get, you know, all of these courses that you can buy individually. You can just buy our gold course or Option Pit Live. Gold course gives you all the past classes for free if you buy the gold course. If you buy the gold course, you get probably the same dollar amount, and you get all of our primers and our past classes for the same price. So you get a lot in the gold course as far as education goes. You'll see our short calendar spread course here. For Option Pit Live, you get to see any of our live events. So it's a pretty good deal for options education. If you were interested in being educated, now off to the markets. Okay, so I think, you know, really just a couple of key things here. All right. You know, I look at this, and there's a lot of literature about volatility being at the bottom, and the market, you know, the market always crashes once vol gets to the bottom and all that kind of stuff. Okay, and I would say on balance, you know, yeah, that happens a lot. You know, volatility was really low here, and then we had that China devalued and kind of set in motion all this sort of devaluation stuff. But again, market wanted to go back up again. We didn't hit those near those all-time highs. We're still, you know, plugging along. But again, we had more problems with interest rates. We had more problems with currencies. We had more central bank aggressive interaction. Okay, all of that stuff drove realized volatility very high. Realized volatility is now at the lowest point it's been in a year. Okay, so the thing that we care about most is if volatility is relatively expensive or not. And right now, volatility is fairly priced at a minimum for what's going on in the market. It just is not moving very much. So what we want to try to find are trades that might make us a little money in the short term, but give us some potential to move down the road. Notice, realize implied volatility stayed basically pinned to the 12 handle, 30-day vol, except for that little jump for, you know, 1, 2, 3, 4, 4.5 months. So if you're buying juice, right, looking for the drop, it could happen tomorrow. China could announce something. Europe could have, or there could be another credit crisis in Greece. Who knows, right? But it's also, don't forget, it's also possible for volatility to stay very low for very long. It is very possible. So again, just going out and paying up for index volatility might not be the easiest thing to do, okay? Or buying vol product volatility. So today in our chat room, we're going to look at ways to buy VIX for as little cost as we can come up with, or no cost, or for credits. Okay, we're going to have to be a little more creative on how we do this. Again, looking at sort of the long-term charts, here was that August one-day spike. I think we dropped 10% in one day or something like that. Bounced, and then ever since then, though. But notice, like, you know, we have had a trend. The trend in volatility since it hit 30 has been pretty steady. And as far as the VIX cash goes, we got maybe a point and a half out of the bottom, and that's about it. That's really as low as VIX goes. However, and Mark and I seem to have this conversation every year, I remember volatility being lower when the at-the-money SPX volatility was in the 7 to 8 percentile, and VIX was routinely below 10. Actually, volatility over 12, we all used to think it was a sale. Okay, I was like 1994. Okay, so It has happened, also happened again in 19 and 2000. Let's see, that was 2006 to 2000, right before that kind of 2007 kind of fiasco when VIX was hitting just sort of, again, maintaining those really low levels. So, well, I'll say we are getting close to the bottom. Implied volatility, I would say, is at the least fairly priced, but most likely slightly overpriced. So it's very hard to buy options in the index and get them to work. Right? At the same time, you know you're selling implied volatility at relatively low levels. Right? So that puts us in a bit of a conundrum, which of course we'll try to solve that problem in our chat room today. Tesla still looks like it's bouncing on good continued, good pre-sales, over 200,000 cars. I guess people paid up to get in line to buy a car. So a little bit of a squeeze in there. We'll see how long it lasts. It's a little bit lower than it was on the opening. Again, but Tesla being priced, considering it's $150, doesn't mean it can't go higher, but they certainly have bid the stock up looking for this. The biggest tell I see is, the vol products cannot hold a bid. The vol futures cannot hold a bid. And as I look at across here, okay, right, our April future is now only down to about $1.50. That's not too bad. So I think most of your VIX trades, or your vol product trades, you've squeezed the hard juice out of them, so to speak, the stuff that will give you the rundown. At this point, I don't expect tremendous things to happen on the downside. So products like VXX are going to slide down a little bit. Products like UVXI will slide down a little bit. But they could easily be kind of locked up and sort of not going anywhere land. There is still future premium. The May future is 17 over 30, so it's still $3.50 over. So there's plenty to be squeezed out of May if VIX continues to go down here, which would be the next leg down on the vol products. Right now, they're about 50-50, some of the short-term products on what's going on. So again, we kind of have a locked, at least anyway, it feels like we have sort of a locked up market. We'll look at index butterflies and things like that. We'll even try to price an iron condor. And I think that's what we have. I think it's tough to expect a bunch out of the market. We'll look for some market movers, but we have earnings coming out in basically 10 days. The cycle starts hitting hard, and we'll see where everything is. I mean, all except for a possible dust up with oil or a surprise out of, there's some more yammering with Greece and the IMF. We need a catalyst at this point. Bad Japanese news really isn't doing much to the market. And you haven't heard a whole lot more of central bank easing in a while. Right? The Fed's not going to raise, or they're not going to be as aggressive raising, and that kind of sort of puts us in no man's land. Okay? So we're going to need a catalyst for the market to do something. Right? So again, we'll look at maybe iron condors, but probably an iron condor now with some sort of vol hedge, maybe buying a VIX call spread, something along those lines to help with the volatility somewhat. We'll price some of that out today, see if it looks worthwhile. But probably through the earnings cycle, I don't know if we're going to see much. All right, everybody. With that, I will talk to you all later.